Hi, prices don't always go up, right? There's quite a bit of volatility in crypto. Bitcoin went from 60K to 30K. Altcoins, they moved even more. And there's two approaches to this, right? You can simply just dollar cost average into the market, regularly buy and simply wait out the bearish times. Or alternatively, you can try to time the market, right? And try to find an approach to sell whenever you see the market is potentially heated and to buy whenever it looks comparatively cheap. Now, buying whenever prices tend to go up, that's a pretty straightforward thing, right? We simply just swap our money from, say, stable coins to the desired asset. But betting on falling prices isn't as straightforward, especially if you want to avoid centralized exchanges, when you want to stay completely decentralized. And in this video, we're going to look at a step-by-step guide how we can bet on falling prices and how we can also bet on, say, relative valuations. So say when we've got, for example, the Bitcoin to Ethereum chart, and you're thinking maybe Bitcoin is comparatively cheap now versus Ethereum, how could we potentially bet on this, make money when the relative valuation of Bitcoin to Ethereum goes up, and how can we profit from this in US dollar terms, not just in terms of Bitcoin? So this video consists of 3 steps. First of all, how can we get our money from an expensive blockchain such as Ethereum to a cheaper blockchain such as Phantom or the Binance Smart Chain or Polygon or Avalanche? That's step number 1. Then how can we get a loan against our stable coins? So a loan that is denominated in something fluctuating that we want to bet against, for example, Phantom or Ethereum or ChainLink. And then what kind of platforms are out there? In our example, for the Phantom blockchain, where we can compare potential borrowing rates, because it does make sense to compare the rates. This is no different to traditional finance, where we simply shop around and check what's the best offer out there. So let's go with the example here of ChainLink. Let's say we are bearish on ChainLink, but let's also look at the relative valuation charts, because when crypto in general is going up, then of course relatively underperforming cryptocurrencies, they might still hold up well. And so maybe we don't want to necessarily bet on the US dollar chart, right? Let's look, for example, now at ChainLink versus Bitcoin. That's the ChainLink versus Bitcoin chart, which did underperform by quite a bit. Let's now look at ChainLink versus Ethereum. And this seems to be the worst or the best charts, however you want to look at this, right? This seems to be the most consistent underperformance. So let's work with the assumption that you hold the opinion that ChainLink relative to Ethereum is likely going to continue to underperform. Now, how can we bet on this without going to a centralized exchange such as Binance or KuCoin or anything like that? First of all, we need to select the blockchain that we want to use for this whole endeavor. And you want to select a blockchain that's comparatively cheap in terms of transaction fees, unless you've got a lot of money that you want to deploy. But let's say you only want to play with a few hundred or a few thousand US. The DeFi ecosystem where you can do this kind of a play is pretty well developed on Phantom and on Avalanche. You might also consider BSC, but I found Avalanche and Phantom the best to do such kind of a strategy. And so let's go here with Phantom. And so first of all, you need to get your money from your other blockchain where you currently have your assets. You need to move it to Phantom. So you go to spookyswap.finance and then you click on bridge over here. And then you bridge your funds over from whatever your source of funds is, say for example the Binance Smart Chain, to Phantom. Now note, you cannot bridge any token because, for example, BUSD is not really used within the Phantom blockchain. So you first have to swap potentially to USDC or to DAI or to Tether. So you do that on the Binance Smart Chain and then you select your token and you bridge your money over from one blockchain to the next. Once you have done that within your MetaMask, you can change the blockchain that the browser extension is interacting with, right? So you switch from Binance Smart Chain to Phantom. So now you've got your assets on Phantom. What we want to do next is, since we want to be bullish on Ethereum and bearish on ChainLink, we want to bet on this chart over here, that ChainLink will continue this downtrend in the future. We want to buy Ethereum. So during the bridging process, I recommend, in case you don't yet have Ethereum, to actually bridge stable coins, because that's where the fees are comparatively cheap. If you bridge something like wrapped Ethereum, you've got higher switching fees, higher bridging fees. So the best is to bridge a stablecoin. Then once you've got the stablecoin in the Phantom ecosystem, you simply swap. So you use your stablecoin and you swap it to wrapped Ethereum. Note that in this specific example, we do quite a few swaps, right? So we swap here from DAI to wrapped Phantom to wrapped Bitcoin to wrapped Ethereum. This is a pretty expensive transaction because the swapping fee here on SpookySwap, it is comparatively cheap to other decentralized exchanges, but it's still 0.2% for each of those routings. So you pay 1, 2, 3 times 0.2% in order to make this swap. If you see something like this and you've got quite a bit of money to swap, not just $2 as in this example, what you can do is use a platform such as 1inch or Beethoven X. That's a decentralized exchange aggregator, a DEX aggregator. And so what a platform like this does is it looks at the exchange rates of different liquidity pools of different decentralized exchanges, and it tries to find the best prices at every DEX and combines your swap by swapping across multiple exchanges. So 1inch is very popular, Beethoven X is also used quite a bit. And so when we look at this trade, for example, there's quite a bit of complication in this order routing that Beethoven X is doing in order to find us a better price. So now we've got our wrapped Ethereum. We now want to use this wrapped Ethereum because we are long Ethereum, right? We want to still follow the Ethereum price movements. We want to use this as collateral for a loan denominated in ChainLink. So we deposit our wrapped Ethereum in something like Geist, for example. Geist is a borrowing and lending platform, and in here we can deposit certain assets and we can borrow against that deposit. So in our example, we would deposit our Ethereum over here. We do get a bit of a return over here, but it's pretty marginal, right? 0.24%. That barely pays for the gas fees probably. But that's pretty much typical for Ethereum and also for wrapped Bitcoin. These returns are usually relatively low because a lot of people are willing to hold these over the long term. And thus the supply of those assets on borrowing lending platforms is relatively high. So you click over here and then you deposit your Ethereum. Now, once you've deposited money, what you will see here is in the dashboard that your collateral balance goes up. And with that, you can borrow against that collateral. So in this specific case here, we've got a loan to value ratio of 62%, and I can borrow up to 78.15% against my collateral. You don't want to go too high on this, right? Because once prices move against you, you might get liquidated, and that can cost 10% in penalty fees. So what you then do is you borrow. So you click on borrow and you select link in our case. Now, what does that mean? It means you are shorting, you are bearish on this specific asset because you borrow now against ChainLink. So your loan is denominated in ChainLink. If the ChainLink price in US dollars goes down, then you can repay that loan easier, right? Because the denomination is in link tokens. And so what will happen in this specific example is you've got your Ethereum that you're long on, you've got your ChainLink that you're short on. And so over time, if ChainLink loses against Ethereum, if it continues to lose against Ethereum, then your collateral in Ethereum will go up in value and your debt in ChainLink will go down in value. And you're basically pocketing the difference. Now, there's no free lunch, right? When we deposit, we get way less APY than when we borrow, right? 0.24% for depositing. In this case, 15% for borrowing. So your expected depreciation of ChainLink versus Ethereum should be at least around 14% per annum. Now, that's only one platform though, right? And that's why we now go to step number 3. We want to go interest rate shopping. We want to find out what's potentially the best interest rate. And so here are the major platforms for the Phantom ecosystem. What's important here is that we have to both deposit and borrow in the same platform, right? You can't deposit collateral on one application and then borrow against it on another application. There are some exceptions for Aave on, for example, Polygon, but most of the time, such a transaction is not really possible. So you need to always look at the delta, the difference between depositing and borrowing. And so in this case, we've got 15% minus basically nothing. So 15, 14%, something like this. is the cost for that position on Geist. Now next we've got Iron Bank. And here we've got again supply and borrow assets, very nicely shown in a comparative table. And so when we now supply Ethereum over here, we've got a way higher return, right? 3% over here. Note there are two kinds of returns. I personally haven't used Iron Bank yet, but it is a pretty large decentralized app on Phantom. I assume, please correct me if I'm wrong, I assume that you get both of those APYs. This is probably paid out in the Iron Bank native token, and this is simply paid out in the base in Ethereum. So I would assume supplying Ethereum over here pays out in a bit over 3% per annum. And now let's look at the cost for ChainLink. That's 6.7% per annum. So the net for that position on Iron Bank would only be around 3% per annum. Way better than what we have here on Geist. So that's why it's worth to always compare. These rates, by the way, they also change frequently. I started toying around with Geist, but because of those favorable rates, I'm very much inclined to give this a try as well. Now there's two more platforms that we can look at. So that's Scream, again, very nicely presented in a single overview table. Supplying Ethereum gives us 1.4%. Borrowing Chainlink costs 10.8%. So that's annual delta of around 9%. So here we need to outperform by 9%, or in other words, the minimum Link versus Ethereum has to fall is 9%. At that point in time, we would be break even. By the way, if you're wondering how much is this actually falling, let's maybe look at 1 year of data here. That's a loss of 69%, roughly, right? This is just the middle of the trend channel over here. Last but not least, let's also look at 100 Finance. Here we get basically nothing for depositing Ethereum, but borrowing Chainlink is also pretty much for free. So simply looking at this, it might look like 100.finance has the best deal over here. And this entire video is simply an example of what kind of strategies you can build with these borrowing and lending platforms, right? It does make sense to compare. It does make sense to look at relative valuations versus other pairs, because maybe you don't want to bet on Link versus the US dollar. Maybe you rather want to bet on Link versus another cryptocurrency. And executing all of this isn't that hard. You just simply have to bridge your money over, swap your funds to the asset that you're bullish on, use that as collateral, and then take a loan in the asset that you're bearish on, denominated in the asset you're bearish on. Now, when that position is open, right, and it goes against you, so you always want to monitor this price over here. When this goes against you, your health index will get worse, right? Your health factor. This number here will decline. And once it's below 1, you are potentially at the risk of liquidation, which you don't want. The liquidation penalty is usually around 10%. There's 3 ways to avoid a liquidation, right? First of all, you could simply just close a position with a loss. So pay back the loan and undo your deposit. The second way is to simply add to your deposit. So simply bridging more money over and adding this to your Ethereum position. The last way is to reduce some exposure. So not to repay all of your loan, but only to repay some of your loan, which will also improve your health ratio. There are a lot of interesting strategies we can develop when using decentralized finance. Shorting specific cryptocurrency pairs is just one of them. There's also ways to gain yield without being exposed to the cryptocurrency fluctuations. So you could, for example, borrow in one cryptocurrency and then use this to deploy this in liquidity pools and earn money from the swapping fees. There's all kinds of interesting strategies. If you're interested in those, you probably will enjoy the premium content here at thebitcoinstrategy.com. There's exclusive content. There's also daily market updates around where Bitcoin and Ethereum might go. And of course, there's an exclusive chat where you can ask me any questions. If you haven't yet, a like on this video would be appreciated as well, because it will help the channel grow. And of course, don't forget to subscribe. I publish videos regularly. Last but not least, there's also a public Telegram group. Simply search for Bitcoin Strategy channel within the Telegram app. See you next time. Bye-bye.